Hi everyone, in this video we'll be going over A-Level Accounting 2023 May-June Paper 3-2 question number 2. This is the structured paper 3 which consists of 3 questions and each of them will be of 25 marks, and you're also given a total time limit of 1 hour and 30 minutes, which means that ideally you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question under 30 minutes. So without any further delay, let's get started. M Limited statement of financial position at 31st December 2022 has been compared with the previous year, and the results are as follows. So we're given the increment and decrement of our assets and liabilities. So this question obviously relates to our cash flow statements. Now remember that the increase in asset is always a outflow, because asset will only increase when we buy them, and when we buy them we have to pay money, right? So that's definitely an outflow, which means that decrease of asset will be an inflow, because asset will be decreased when we sell our assets, and we definitely get an amount for selling those assets, which acts as our inflow. Similarly, increment in liabilities will act as our inflow, because liability will increase when we take out loan, and when taking out loan we receive cash in the company, which means that it will be an inflow, and the decrement in liability will actually be an outflow, because liability will decrease when we pay our payables, right? We definitely have to send cash out of the company, which will act as our outflow. So always remember these 4 things. Okay. Now we're given additional information. The carrying value of land and buildings at 31st December 2021 consisted of land at the cost of 150,000 and a building at the cost of 400,000, and no depreciation had been provided on either land or the building, and the building was purchased on 1st January 2021. And remember that the current date is 31st December 2022. Now, a new building was acquired in 2022, and on 31st December 2022, it was decided that depreciation should have been provided for both buildings at an annual rate of 5% using the straight line method, and the depreciation charge for 2022 was 26,200, and the prior period adjustment had been made accordingly. So the prior period adjustment just means the depreciation charge for 400,000 for the year ended 31st December 2021. So let's figure out its depreciation charge. That is just going to be the cost of 400,000 multiplied by our rate of depreciation of 5%, which results in the value of 20,000. So this is the depreciation that should have been charged in the year ended 31st December 2021, but it was not charged. That is why the prior period adjustment had been made accordingly, which is that this depreciation of 20,000 had been adjusted. But remember that during adjustment, we cannot really prepare our statement of profit or loss again in order to include the depreciation, which means that we need to adjust this depreciation to our retained earnings and not the statement of profit or loss. You need to remember that. And we're also told that a new building was acquired, which means that there had been a purchase of the building, right? So let's figure out the purchase. Now, always remember that for non-current assets, I'm just going to write down the schedule. We start with the opening balance. Then we add all of our purchases, and these purchases will be at the cost. Then we subtract all of our disposals, and these disposals will be at the net book value, and also remember that the opening balance will be at the net book value. Then we'll subtract the depreciation charge for the year, and then we can just figure out our closing balance. And this closing balance will also be at our net book value. In this case, we're basically trying to figure out this item for our buildings. And in this case, we're not given the opening balance and the closing balance. We're just given the increment value. And this increment value just refers to the closing balance minus our opening balance. So if you bring this to this side, that's just the value of 77,800, right? So we're trying to figure out the purchases. We were not given any information regarding disposals, so there are no disposals. And for depreciation for the year, we are given it right here, that's 26,200. But also remember that we did not charge the depreciation for last year, so we need to include this amount of 20,000 as well. So the depreciation is just going to be 26,200 for this year and 20,000 for last year. And this will be equal to the difference between the closing balance and the opening balance, which is basically our increased amount. So that's 77,800. Now the value of purchases will just be equal to 77,800 plus 26,200 plus 20,000. This results in the value of 124,000. This is for buildings. All right. Now for the third one, a machine with carrying value of 28,600 was sold for 29,500. So we can clearly see that the disposal value is greater than the carrying value. So there is a profit on disposal. That is just going to be the difference amount. So that's 29,500 minus 28,600, which results in the value of 900. And we're also told that the depreciation charge of machinery for 2022 was 42,600. Okay, we can see that for machinery, we're given a decreased amount. Now also remember that this is also the difference between the closing balance and the opening balance, but since this is a decrement, it will represent a negative value. So again, we're trying to figure out the purchases for machinery as well. So we just repeat the same process like we did before for buildings. We're trying to figure out the purchases. We're given the disposal in this case, and remember that for disposal, we have to include the net book value, or in this case, the carrying value, which is given to be 28,600. Then we need to subtract the depreciation for the year, which is given to be 42,600. And this gives the decrement, which is the negative amount. So that will be minus 34,600. Now the purchases of machinery is just going to be minus 34,600 plus 28,600 plus 42,600. And this results in the purchase of machinery to have the value of 36,600. Now this is machinery purchased. Okay. Now on 1st June 2022, an issue of 60,000 bonus shares was made on the basis of 1 ordinary share for every 10 shares held. So this information is given so that you can figure out the number of ordinary shares before the share issue. So what we know is that for 10 ordinary shares, we're giving out 1 new bonus shares. And we know that the total number of bonus shares is 60,000. So we're just trying to figure out the corresponding ordinary shares. So for 1 bonus shares, we know that it was 10 ordinary shares. Now we're just trying to figure out the number of ordinary shares for 60,000 bonus shares. That will be 10 times 60,000, which results in 600,000. This is the number of ordinary shares before any of our bonus issues. And the policy of AM Limited is to keep its reserves in the most flexible form, and the bonus issue was fully covered by the share premium account. All right. If we have a look above, we can see that we're given the increment in ordinary share capital of 140,000. Out of this, 60,000 is due to our bonus shares. So there is still remaining 80,000. Let's have a look below. On 1st August 2022, additional new shares were issued for cash at 1.50 per share. So we can see that these additional shares increment of 80,000 was due to new shares. And remember, the value included here only includes the nominal rate of 1, which means that the number of new shares issued was also 80,000, but it was issued at a premium of 1.50. So let's figure out the value of new shares. And this value will also include our premium rate. So the number of new shares was 80,000. We just need to multiply it by 1.50, which results in the value of new shares to be 120,000. Or we can just consider this as issue of shares. All right. On 1st March 2022, the 2021 final dividend of 0.08 per share was paid. Now remember that 1st March 2022 is before 1st June 2022, which means that this dividend of 0.08 per share was only provided on the existing ordinary shares of 600,000. So let's figure out the total dividend for 600,000. We paid out 0.08. Now on 1st October, an interim dividend of 0.12 per share was paid. Okay, so remember that 1st October is after the date of 1st August. So this dividend of 0.12 is provided on the existing number of shares of 600,000, as well as the bonus shares issued on 1st June 2022, which was 60,000 shares, as well as the new shares issued on 1st August 2022, which was 80,000. And now we need to provide the dividend of 0.12 per share for these number of shares. Now this gives the total dividend paid for in the year 31st December 2022 to have the value of 136,800. Then the 8% bank loan of 100,000 was taken out in 2020 and a partial repayment of 60,000 was made on 1st April 2022. So for 3 months before April, that's January, February, March, we utilized the entire loan of 100,000. Now for the remaining months after 1st April, which is 9 months, we already repaid 60,000 out of 100,000, which means that the only loan amount that we utilized was of 40,000. Now we need to figure out the interest rates accordingly. So let's figure out the interest on debentures. So we know that for the first 3 months, we utilize the loan amount of 100,000. So we need to charge the rate of interest on this 100,000 for 3 months. So that's just times 8%, which is the rate. And this will provide the interest for 12 months. But we have only used this 100,000 for 3 months out of the 12 months. Then we have the remaining 40,000 for 9 months. So 40,000 times the rate of interest. This will give the interest for 12 months, but we have only utilized this amount for 9 months. And this gives the interest on debentures to have the amount of 4,400. Now cash and cash equivalents at 31st December 2021, which is the last year, amounted to 42,000. So this is basically the opening cash balance. Okay, we have gone through all of our additional information. So now we can have a look at our first question. We need to explain why M Limited made a prior period adjustment in information 2. We need to support our answer by stating the relevant international accounting standard and the accounting treatment as well. Okay, let's just refer to the second information again. We were told that a new building was acquired in 2022. On 31st December 2022, it was decided that the depreciation should have been provided for both buildings at an annual rate of 5% using the straight line method. We are given the depreciation charge for 2022, which was 26,200, and we also figured out the corresponding depreciation charge for the year 2021 to be 20,000. So this is the depreciation that should have been charged in the year 2021, but we did not do so, right? So this is definitely a change in accounting policy, because previously we had no provision for depreciation, but now we are stating that buildings also need to be depreciated. And these changes in accounting policy will always fall under our International Accounting Standard 8, which is called Accounting Policies, Changes in Accounting Estimates and Errors. So we need to adjust for this, right? And in order to do so, we just adjust it against the retained earnings of our opening date. That is just 1st January 2022. So we just need to write this down for our first part. We can start with the depreciation. So depreciation of 20,000, which you already calculated, on the existing building. This is a building with the cost 400,000. Should have been made for 2021. And this is due to a change in accounting policy. This falls under IAS 8, which is called Accounting Policies. Changes in accounting estimates and errors. And we also need to state that this prior period error should be adjusted against the retained earnings. So the prior period error is adjusted against the retained earnings brought forward on 1st January 2022. That's all for the first part of this question. Now let's move towards the second one. We now need to calculate the profit for the year ended 31st December 2022. So again, for this, we'll be utilizing our retained earnings, because if we take a look above, we can see that we are given the increment in retained earnings to be 34,900. So you can only remember the format for retained earnings from our statement of changes in equity. So what we used to do was we started with our opening balance, then we made adjustments, and in this case the first adjustment that we need to make is for the depreciation of 20,000, and remember that depreciation is an expense, so we just naturally subtract it. Or we can also term it as prior period adjustment. Then we used to add our profit for the year, and subtract all of the dividends paid, and this will result in our closing balance of the retained earnings. And remember that in this case we're given the increment, and that increment is just the difference between our closing balance and the opening balance. So I'm just transferring this term to the next side. So we'll start with depreciation, so that will be minus 20,000. We're trying to figure out the profit for the year. We have figured out our dividends paid. Right here we calculated it to be 136,800. And this will be equal to the closing balance minus the opening balance, which is basically the increment. And the increment amount was of 34,900. So this is just 34,900. Now we can easily figure out our profit for the year. We just start with the increment amount of 34,900. We then add 20,000, and we also add 136,800, which results in our profit for the year to be 191,700. That's all for the second part of this question. We can now move towards the third one. Okay, for the third part, we need to prepare a statement of cash flows for the year ended 31st December 2022 in accordance with our IAS 7. So this is statement of cash flows. And remember that while preparing statement of cash flows, you need to prepare 3 different sections, right? The first section will be for our operating activities. The second section will be for our investing activities. And the third section will be for our financing activities. Again, we start with our operating activities. So I'm just going to write down the heading. This will be the cash flows from operating activities. And always remember the format that we need to start our cash flows from operating activities with our profit from operations. So in the second part, we have already figured out our profit for the year, right? And profit for the year is just profit from operations minus the finance charges. We've calculated the profit for the year. That was 191,700. We're trying to figure out the profit from operations. And our finance charge is all of our interest charges, which we have already figured out to be 4,400. So this just means that our profit from operations will be 191,700 plus 4,400, which results in 196,100. We'll start with this amount. Okay, now remember that we're preparing cash flows, so we can only include all of our cash inflows and cash outflows. We cannot include non-cash items. But while preparing our statement of profit or loss, from which we derive this profit from operations, we also include non-cash expenses such as our depreciation, right? So previously, while calculating profit from operations, we actually subtracted those depreciations. Now, in order to exclude it, we just have to add it back. That's what we're going to do. That will be the second step. So we're just going to add all of our depreciation back. And the depreciation given in the information were for our buildings and then machinery. For buildings, it was 26,200. And for machinery, it was 42,600. Remember that we will not be adding this depreciation of 20,000 because this was the depreciation charge for 2021, whereas we're now preparing the cash flow statement for 2022. Okay, so the depreciation that we need to include will be 26,200 for building and 42,600 for machinery. which means that the total depreciation will be 68,800, and we are adding it back in order to exclude it from profit from operations. Now, while going over the information above, we also figured out that there was profit on disposal. And remember that this relates to disposal of non-current assets, which should be categorized under investing activities and not operating activities. So we'll be excluding this as well. And while calculating profit from operations, we added the profit on disposal. Now, in order to exclude it, we just have to subtract it back. So the next item is going to be profit on disposal. That will be 900, and we're excluding it. Okay, now we can just move towards our increment and decrement in current assets and current liabilities, except for cash or bank balance. And we are only looking at current assets and current liabilities. So for inventory, we can see that there is a decrement. And previously, I've already said that the decrement in asset will be an inflow, which means that we need to add this amount of 3,600 now. Let's do that. That will be decrease in inventory of 3,600. Then we have trade receivables, and there is an increment, which means that this is an expense which we need to subtract. So that's going to be 5,900 subtracted as an increase in trade receivables. Okay. Then we do not include cash and cash equivalents. We do have trade payables. Again, this is an increment, and this is a liability. And we've already categorized that the increment in liability will be an inflow, which means that we need to add this amount of 5,600. So that's positive 5,600 as an increase in trade payables. Okay. So that was all for our current assets and current liabilities. So we can just figure out the total now. That will be 196,100 plus 68,800 minus 900 plus 3,600 minus 5,900 plus 5,600, which results in 267,300. Now the next step would be to include our finance costs as well. So that will be our interest and tax. In this question, we're not given any information regarding interest. In this question, we're not given any information regarding tax. So we just include interest paid, which was the finance cost itself. We calculated it to be 4,400. And this was the paid amount, which means that this is an outflow. We'll be subtracting it. Now we can get our net cash from operating activities. That is just going to be 267,300 minus 4,400, which results in 262,900. Okay, that's all for the first section. Now we can move towards our investing activities section. So that will be cash flows from investing activities. And in this case, we only include the purchases and sales of our non-current assets. So we've already figured out the purchases of building and machinery. We can start with those amount. So right here, we have purchases of buildings to be 124,000 and purchases of machinery to be 36,600. Let's include this. And remember that these are the purchases, which means that we need to pay in order to purchase those non-current assets. So these will be our cash outflows, which we need to subtract. So we have purchase of buildings to be 124,000. Then we had purchase of machinery and it was 36,600. Then also remember that there was a disposal. Right here, a machine with carrying value of 28,600 was sold for 29,500, which means that this is the amount that we received by selling our machine. So this is the amount received, which is cash inflow. We just need to add this amount. So that's 29,500, which is our sale of machinery. Okay, that's all for our non-current assets. which means that now we can figure out the net cash from investing activities. Okay, let's figure out the total. That will be negative 124,000 minus 36,600 plus 29,500, which results in negative 131,100. Okay, now we can move towards the third section, which is our cash flows from financing activities. And these will only include the changes in our equity and non-current liabilities. So first of all, there was issue of shares, right? And remember that there was a bonus issue, but this will not be included in our statement of cash flows, because remember that bonus issue is funded from the reserves itself. So we're not getting cash from any outside parties, which means that there is no transaction to be recorded in our statement of cash flows. So we only include the new shares issued at the date of 1st August 2022. And the issue of shares value, we already calculated it to be 120,000. And remember that this is the amount that the company is getting from outside parties for issuing shares. So this is definitely a cash inflow, which we need to add. So that is issue of shares, which is of 120,000. Okay. Then we were given information regarding our bank loan as well. Okay, sorry, this was not interest on debentures. This was interest on bank loan. So the amount is correct, just the term was wrong. And in this case, we were told that there was a partial repayment of 60,000 on 1st April 2022. So when we're repaying bank loan, this is cash outflow, right? 60,000 goes out from the company to the bank. So this is an outflow that we need to subtract in our statement of cash flows. Let's write it down. So that will be negative 60,000 as repayment of bank loan. And we also need to include the dividends paid in this section, because essentially cash is going out of the company. And we have already calculated it. We included it right here as well. That was 136,800. And these are the paid amount, which means that these are outflows. So we will be subtracting this amount. Okay, that's all for financing activities. So we can figure out the net cash from financing activities. And that is just going to be 120,000 minus 60,000 minus 136,800, which results in negative 76,800. Now the next step would be to figure out the net increase or decrease. So for that, I'm just going to add all of the net cash from 3 different sections. So we'll be adding net cash from operating activities, that's 262,900, to net cash from investing activities, that's minus 131,100, to net cash from financing activities, that's minus 76,800, which gives us a total of 55,000. That's a positive amount, which means that there is an increase. So we can write it down as net increase in cash and cash equivalents. Now the next step would be to add our cash and cash equivalents opening balance. Or this is just at the beginning of the year. And we were given this information as well. We were told that the opening cash balance was 42,000. Now we can figure out our closing cash balance. So that will be cash and cash equivalents at the end of the year. That is just going to be the sum of net increase or decrease to the opening balance. So that's 55,000 plus 42,000, which results in 97,000. Now we can also verify this information because we were given that there was an increment of cash and cash equivalents of 55,000. And in our statement of cash flow as well, we figured out the net increase to be 55,000, which means that our statement of cash flow is correct. And this concludes the third part of this question. Again, you need to be showing all of your workings in this particular box so that you get your markings correctly. That's all for this question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.